Welcome to the NIN Ventures launch event, hosted by the Harvard Business School Private Equity and Venture Capital Group of Chicago.
Today we are here to talk about betting on horses versus betting on companies. Private equity and venture capital funds, we normally tend to invest in companies, and we pick our companies based on their technology, their market, competition, their growth potential, and most importantly, who's going to be managing them, management. Jerry here will tell us about how he picks his horses, and then we're going to try and compare that to venture capital. Jerry?
Hello, good afternoon, folks. Glad to have you with us at Arlington Park. First thing I'm going to show you here is a daily racing guide. Every guest receives a daily racing guide, and in the guide is a listing of all the horses racing that day. The important part of the guide is this gray box shown here. In the gray box, it tells you how the horse has performed throughout his life. It shows you how many times he's raced on our particular track, which is an all-weather track. It's not a dirt track, it's all-weather. Some horses like that surface, others do not. Others like the conventional dirt track. This particular horse, one, has been on this track 4 times and has won 3 of the 4. So he really likes this surface. So those are the kinds of things we look in here, and we determine which horse has the best opportunity to win his race against his competition. There's all types of history listed by this horse, previous races, how much the horse has earned. It shows the jockey, how many times the jockey has won. These are things helpful when you choose a horse. Same with the trainer. How many times has a trainer won here? What is his percentage of win? And then we have a company that takes all of this data, it runs the data through their computer models, and it determines, in their estimation, the order of finish for each of the races today. And then they tell you why they think particularly this horse is going to win. By reading that information, you can gain handicapping knowledge. You'll start understanding patterns of what to look for. And they're a big help. They're not always 100% accurate, but at least they can steer you to the potential horses that have a shot of winning something in this race, or their particular race. And then the track handicapper, this is what he thinks the horses will be bet on. He thinks that most money will go to horse number 3 in this upcoming race 2, and that the second place horse will be horse 1, 5, and 4 in that order. They don't always agree. The Brisnet is an independent company not associated with our own handicapper. So you might see a difference there, and then you kind of lean to go which one you have most confidence in or which one you agree with the most. Now, as far as betting goes, your conventional bets are a win, place, show. That's first, second, and third. If you take a horse to win, that's what the horse has to do. He has to win for you to cash your ticket. If you take the horse to place, he has to come in first or second. If you take the horse to show, he has to come in first, second, or third. I always recommend that if you choose a horse, if you finalized a horse to win, always back it up with a place bet. Because so many times your horse just misses by a nose or just misses by a head, and then you don't cash a ticket. Where if you have the horse to win and place, if that occurs, you're at least going to cash the place bet. If he wins, you're going to cash 2 bets. So it's like hedging your bet.
Well, that was a great insight in terms of betting on horses, but how do these horse owners actually pick their horses? I mean, that's an interesting concept. That's very similar to what we're doing in terms of private equity.
How they pick their horses to begin with,
yeah,
right?
Exactly.
Okay. Mostly it has to do with the breeding of the horse. What has the horse's parents done in the past? As an example, Doesn't always work though. We had a really well-bred horse that a sheik had bought for $16 million. And unfortunately, I could beat this horse. He just never ran well. He called the Green Monkey was the name of the horse. And but on the other hand, you know, most of the times it works out. If the breeding of the horse has good bloodlines, the horse probably will be a good runner. And the breeding can go depending upon the surface. We have two surfaces here at Arlington. We have the all-weather surface, and then we have the grass. And it's really two different horses. Some horses like the grass, some do not like the grass. It just depends on the breeding of the horse. So that's how they choose their horses, is usually the bloodline.
So we're pretty much close to like management in our company. Go pick management, you know.
Right, exactly.
The biggest important factor in venture capital and private equity is valuation. And from what I understand, these horses are multi-million-dollar horses.
Not so much these horses. When we have our premier day, which is called the Arlington Million, these are your top horses in the country coming to Arlington to compete for the $1 million race. Those are horses that would be in that category of
So what is the
multi-million.
difference between those horses and you know, horses that are running the race today?
The purses that they win. Every race is associated with a purse. This is $30,000. Okay. The winning connections of that race would get 60% of that $30,000. That would go to the owner. And the jockey and trainer are also paid from that purse. Come in second, you get 20%. Third, 10%, and it goes all the way down to a minimum percentage. And the more you win of purse money, the larger the purse, and the more you win, the more of your earnings. Like for instance, this horse here is 6 years old, and he has won almost $500,000. But it's taken him 4 years to do that, you know, and that was, he's raced 30 times to get that $464,000.
I see.
One point also about jockeys. We have a jockey here this year racing at Arlington. His name is Kent DeSormo. He has won the Kentucky Derby 3 times. He's won $262 million in purse money. He gets 10% of that, so he's made $26 million riding horses. So horse racing has been very good to him. He knows how to get a horse to the finish line for sure, but he's got to have the horse to get him there too. So you can't always bet on the jockey.
Right? That's the one you're betting.
That's the third race.
Yeah.
No, that's the third race.
race.
Yeah.
Okay.
Yeah, this the second race here.
Oh, the second race.
Yeah.
Okay.
In the second race, they start way, you see the starting gate way over there. They start there.
Right by the Jaguars?
Yep, way in the corner there, and they come out onto the main track, and then they'll finish right here. All the races finish at this finish line here. So that's called a mile distance. And a furlong is 1/8 of a mile. A lot of times in horse racing, they refer to 6 furlongs. That's 3/4 of a mile. A furlong is 1/8 of a mile. Okay. So I said we'd look at 3, 1, and 4, right?
Well, thank you very much for your time, Jerry.
Okay.
And Jerry will be here in and out.
Yes, in and out all
the race.
day, asking any questions anyone might have, and I hope you all have a good time and make some money if you're going to do some betting, okay?
Thank you.
All right. So, like I said, I will be back, and you can stop me. You can't miss me in this jacket. Just grab me and ask me a question, or say, why?
I've got a question for you. It's the question that every private equity guy really wants to ask a fellow like you. Is it the horse or is it the jockey?
It's the horse. The jockey, I would say, maybe has 5% of an effect on the race. You know, that his ability, his or her ability. But our colony of jockeys, maybe 90% of them could all perform similar. There's maybe a 10% that are struggling. Maybe they're just in a slump. You know, they're athletes, and athletes get in slumps, and that could be happening here too. The information isn't here. It shows you what their winning percentage is. If the winning percentage of a trainer or jockey is less than 10%, you want to kind of shy away from not saying they can't win, but they haven't been winning very much. If it's more than 10, take a close look at it, feel comfortable with the trainer and jockey.
It's kind of like a car and a driver. You know,
Yeah.
drivers do have an impact on how they race, but you know, car is a huge, the biggest determination.
Right.
Thanks, Jerry.
Okay.
Thank you.
You're welcome. Bye-bye.